The crypto bull market isn't dead. It's just wearing a different face. What we're seeing right now isn't a collapse. It's a reset, a necessary purge before the next wave of massive growth. Prices are bleeding, charts look terrifying, and the headlines scream, "Crypto crash." But here's the truth most people won't tell you. This is exactly how every major bull run begins. When fear hits its peak, opportunity quietly shows up. So before you panic sell or move your portfolio into stable coins, watch closely, because this may be your once-in-a-decade entry point. Over $150 billion vanished from the crypto market in a single hour. Bitcoin plunged, altcoins followed, and social media filled with the same question. Is this the end? Not quite. Every correction has a story, and this one's no different. Three big factors triggered the fall. First, US-China trade tensions are back on the global stage, scaring investors away from risk assets. Second, the US government shutdown is freezing budgets, delaying approvals, and shaking confidence across all markets. Third, it's tax season, meaning countless traders are liquidating positions to settle dues. Combine those with leveraged long positions and automated liquidations, and you get the sudden market puke we just saw. But look closer, and you'll notice something remarkable. In every past cycle, 2013, 2017, 2020, Bitcoin has faced crashes that felt like the end of the world. Yet each time, those who held firm or bought the dip came out as winners. History doesn't repeat, but it rhymes. And this pattern keeps rhyming louder. This is not the end of the bull market. It's a shakeout, a stress test, a moment when the impatient exit and the smart money steps in quietly. Why is that? Because the fundamentals of crypto have never been stronger. Institutional investment is at an all-time high. Bitcoin ETFs are attracting record inflows. Ethereum ETFs are climbing the global rankings, pulling in billions in just months. Wall Street giants like BlackRock, Fidelity, and Charles Schwab are building the infrastructure to make crypto accessible to every traditional investor. When an $11 trillion financial powerhouse like Schwab announces full-scale crypto trading by 2026, it's not a side project, it's a generational shift. Then there's the tokenization revolution. From real estate to commodities, traditional finance is racing to move assets onto the blockchain. Larry Fink, CEO of BlackRock, has said it plainly. Everything will be tokenized. Why? Because blockchain offers faster, cheaper, more transparent transactions than any legacy system ever could. The same technology that powers meme coins is now being tested for trillion-dollar financial instruments, and it's holding up flawlessly. Speaking of meme coins, here's the part that blows everyone's mind. Those useless tokens that people laugh about are proving blockchain's resilience and scalability. Billions of dollars are moving across decentralized networks at lightning speed, with near-perfect uptime. Just like cat videos tested the early internet's ability to handle global bandwidth, meme coins are stress-testing blockchain, and it's passing every test. Meanwhile, corporate adoption keeps accelerating. Public companies have purchased more than 4 million ETH in just the last quarter. Institutions now hold over 10% of Ethereum's total supply, their largest stake ever. Even longtime Bitcoin maximalists like Michael Saylor are acknowledging Ethereum's credibility, crediting people like Tom Lee for bridging the gap between Wall Street and Web3. When traditional finance embraces crypto, the entire landscape transforms from speculation to legitimacy. And let's not forget macroeconomics. Governments around the world continue to print money, raise debt ceilings, and inflate currencies. Every dollar printed weakens fiat and strengthens the case for decentralized, limited supply assets like Bitcoin. Interest rates are already turning lower again, signaling cheaper capital and renewed investor appetite for high-growth opportunities. Add in the growing demand for digital privacy, the rise of on-chain gaming economies, and the surge in DeFi innovation, and you realize crypto isn't shrinking, it's evolving. Even BlackRock's head of ETFs recently said digital asset ETFs are showing tremendous global momentum, while traditional funds like the S&P 500 ETF are bleeding outflows. Money isn't leaving the markets. It's moving into crypto. This migration of capital from old systems to new ones is the story of our decade. So, let's be real. Yes, the market looks ugly right now. Yes, your portfolio might be down, but zoom out. We're in the middle of a technological revolution where institutions, developers, and innovators are building the digital financial world of tomorrow. This pullback? It's a breath before the next sprint. The smart investors are accumulating, not fleeing. The crypto bull market isn't over. It's resetting, reloading, and preparing for its next massive wave. The question is, are you ready for the comeback? Because when the dust settles, history will remember who stayed focused while everyone else panicked. If you want to stay ahead of that next wave, subscribe, stay informed, and remember, the biggest profits are always made when everyone else is afraid to buy.